Hi everybody, welcome to Chelsea Groton Bank's Facebook video. Today we are talking about bread and butter. It's an introduction to taxes, and this is appropriate for students in grades 6 through 8. My name is Miria Gray. I am the Community Education Officer here at Chelsea Groton Bank, and we're going to get right into this. If you have any questions or comments, please feel free to ask them below and we will get right back to you. All right, so let's talk vocabulary. Sometimes what happens when we're talking about taxes is not that people don't understand taxes, they just don't understand what we're referencing. So, what are taxes? Taxes are a government fee on business and individual income, activities, products, and services. These taxes are used to pay for things like roads and schools and bridges, things that we expect to be working, but there's no real money to pay for it because it's a federal program, a state program. So that's where they get the money for it. An income tax is a tax on an individual's income, what they earn out of their paycheck, their salaries, wages, tips, and commissions. In some locations that you have to pay state and federal tax, which is true of Connecticut. In other states, you might only have to pay a federal income tax. Business taxes, businesses often have to, or you do have to pay taxes also. In some locations, there's also taxes on products that you buy. There is a sales tax in Connecticut, so if you go to the store and you're buying products and services, you have to pay a percentage of tax on those. Under the Federal Income Insurance Contributions Act, individuals also have to contribute out of their paycheck a percentage of their income to Social Security and Medicare. And those are for after retirement or if you can no longer work for some reason. Social Security provides you monthly income, and Medicare will provide health insurance benefits after you reach the age of retirement. Earned income is money that you get from working, and all of the earnings, including commissions and tips. So if you were a car salesman and you earned commissions on the cars that you sold, you would have to pay earned income tax on those commissions, as well as if you were a waiter or waitress, you would have to pay earned income taxes on the tips that you earned as well as your salary. Payroll deduction, that's an amount that an employer withholds from your paycheck. Mandatory deductions include things like taxes, Medicare, and Social Security, but sometimes there are voluntary deductions that we have taken out, and those are for things like health insurance benefits, direct deposits, charitable contributions, loan payments, those types of things. Okay, income and taxes. So, they're oftentimes, depending upon your level of education or training, you might fall in a different, what we call tax bracket. So if you have a bachelor's degree, it's your first month on the job, and your salary is $40,000, for example, you might be in one tax bracket. If you have a master's degree, 5 years on the job, and you're earning $76,000, you might be in another tax bracket. If you have a master's degree plus advanced certificates, you've been on the job for 20 years, and you're earning $122,000 a year, you might be in a different tax bracket. And tax brackets are set up, and they're confusing, and there's charts and graphs and numbers, and it depends on how much you make. We're not going to talk about what all of these are because I have a video that'll explain it to you better at the end, but we are going to talk about the difference between a progressive tax and a flat tax. The United States, on the federal level, we currently have a progressive tax system, meaning that people who make less money pay a lower percentage, and people that make more money pay a higher percentage. Some people want to change our system to a flat tax. and that's where everyone pays the same no matter how much they make. So say no matter how much you make, you would pay 15% of your income as a flat tax. Currently, it's a different percentage based on the amount of income that you make. So you would have to think about what makes more sense to you. So when they're talking about all of these tax discussions, these are some of the things that they're talking about: progressive versus flat taxing and who should be paid more. It's all a very complicated process. So now we're going to watch a quick video that explains about tax brackets, and I'm working from home. We've had some technical difficulties. I really wanted to insert this video and get it to work for you so it would autoplay, and that is just not happening. So we're going to get it to play by clicking on it, hopefully.
It's Nutrisystem's spring sale. For a limited time, buy 1 month and get 1 free, even on new personal plans.
These are tax brackets for 2019. Simple, right? But many of us make a common mistake when looking at this. Let's say my income is $84,000. You might think that puts me in the 3rd bracket, so I would owe the federal government 22% of my income. This is wrong, and it's causing us to have uninformed debates about tax policy. Here's how it actually works. Let's go back to my $84,000 income. Now, instead of thinking of tax rates as brackets, we should think of them as pockets. But first, there's one special pocket we need to talk about. The money we put in this pocket is not taxed. The government automatically lets single people put $12,000 in this special pocket, and more for couples. But if you spend a lot of money on things like medical expenses or charitable donations, you can sometimes put in more. These are called deductions. With the $70,000 that's left over, we can start filling up the pockets. The first pocket only has room for $9,700, so I only pay 10% on this money. Then I pay 12% on the money in the next pocket. And then 22% on the money in this pocket. These are called marginal tax rates, and that's how these brackets actually work. So if I get a raise, that new money goes into the first pocket with empty space. When space runs out, we put it in the next pocket. So the raise, and only the raise, would be partially taxed at 22% and partially at 24%. So when politicians say they want to raise the top tax rate, doesn't necessarily mean these pockets and your money are affected. They're talking about tax rates on the pockets way over there, which are only used once people have filled in these smaller ones. Marginal tax rates are a pretty simple concept once you get the hang of it. So the next time a politician says the government wants to take away 70% of your income, just send them this video.
Okay, so I hope that made sense to everybody better than I could explain it. It's a really great video, and taxes are a very hard concept to understand, so thanks to Vox for helping us explain it to you. Have a great day, and we will see you tomorrow. Bye-bye.